folks, I'm L.A. Little and this is your daily TA wrap. Where we take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. It was a beautiful day here. If you were short, or at least protected, it was a beautiful day in the markets as well, as the Dow, the NASDAQ, the Russell, everything blew out the bottom. Huge declines right across the board. And as I said to you last night, this market feels different, it smells different, it looks different. And even though I've seen so many V-shaped reversals that I can pull my hair out, I think I said last night, my hair stands up every time, right? These setups occur because over and over and over again we've seen V-shaped reversals just erase all gains, or all losses I should say, and just immediately put us back to new highs. Well, this one felt different. It's been setting up different. The structure has been setting up different. I wrote a piece. If you haven't read it, you might want to. The wolves are gathering at the market's door. I wrote that yesterday. I got a lot of, snipe calls like usual, people giving me a hard time about the way I write or what I say. One guy was like just hammering me for a hugely bad call yesterday. Well, and the great part about it was these commentators make these bad calls and then they just, they slip away and never say anything about it. Well, I wonder if he's going to come back on now and talk about the bad call he made. You don't know for sure that the market's going to do what it's set up to do. In other words, when the structure sets up, that doesn't tell you it's going to happen. That just says you the potential is there, right? And when that potential is there, clearly the danger is higher. And now, I don't try to, crystal ball these things and tell you exactly where something's going on the day it's going. I'm not that smart, and I don't think anybody is. I can certainly not tell you 6 months down the road what's going to happen, which so many people try to do. But I can give you a pretty good indication based on the tea leaves that the market gives us, what the most likely behavior is going to be, and certainly what kind of risk is out there if it actualizes. And today you saw it. Dow Jones down 266, almost 267. 16,170. S&P's dropped 39 points, 1833. They are down under their lows. They break 3 swing points today. And you know what that means. That's not a good thing. Composite, 129 3/4 lower. 40.54, they're down at their lows that they were earlier this week. The NDX, I think, undercut the lows, 34.87 3/4, down 112.67. The Russell down 32, 11.27.5. We've got JP Morgan, Wells Fargo tomorrow. The financials, ABCD structure bearish today. Wells Fargo is a big component of that particular index, as is JP Morgan. I guess they're telling us those earnings aren't going to be good tomorrow. Dollar was down slightly. It's been getting hammered. It tested lows today. We'll look at that chart. Gold lifted. It was up about 15. I took this snapshot kind of late today. It was up $2 after hours when I took the snapshot about an hour ago. Oil was actually about flat today. Bonds were up today. They were up a decent amount. Looks like they're down after hours. And copper was flat. So markets get hammered, and when we go look at them, let's start where we usually do, which is the S&P 500, and let's think about what we have here. I've talked, excuse me, I've talked many times about the idea that there's structure to the market. And the structure I talk about a lot has to do with swing points and has to do with breaking multiple swing points either on a single time frame or multiple time frames. And I didn't quite draw that last one in right, but today we broke 3 of them. All lined up like ducks. We knew that structure was in place. We talked about that structure. Remember when we were up here making the highs? I believe I was fairly clear that it looked to me like it was going to come back and we'd see what that retest regen looked like. Well, it blew away the retest regen, and even though it bounced out of there, right, it came down with expanded volume into those tests. It wasn't on this one, but it was on the others, right, these other 2. Well, today you come down, you break them, you actually get the expanded volume on the break, and that's the worst place to get it if you're going to get it. It's 37.5, you had 37.3, and you had a lot less on these others. So you break them. This is not huge volume, right? So we're not talking about, dynamic volume here, but you do break them. You're not that extended. You now have ABCD structure in place, bearish, right? That extension is going to take you down, 1800 level. If you do other types of calculations, depending on where you want to draw these things, I mean, some folks will draw, some sort of a range in here and say, okay, the extension's the other side of the range, right? Which would take you down into about 1775 or something. I like to look more, if I can, to see where I have good support. I don't see any support in here. There's just nothing here. There's nothing there. When you do these extended moves and you don't rest, that's what happens. There's nothing underneath you. Now, if you never come back, it don't matter. But if you come back, it does. And when you're coming back, if you start coming back heavy, there's nothing there to support you. This is about an 82%er, 2 to 3 bars extension to the downside. We could find ourselves down here fairly quickly. That's the S&P 500. Let's go over and look at the weaker guys. The NASDAQ has been the leader on the way down. The NASDAQ got into the Feb 3 bar. That was the one we were talking about, was target. It got into it, pushed into it, got the little bounce back out of it, goes back up, flips back around, comes back down. Still doesn't have that much volume. Here we had 26, there we've got 24. But you're deep enough into it second time around, I suspect you're going to get to the bottom of it now. And when I look at the NASDAQ, knowing it's the weakest, or has been the weakest, it doesn't have as much to fall as the others because it's already down there. I suspect this is the area you're going to see support draw down here tonight. That's where it's probably going to try to get to. That's under the 4,000 number, and that's going to raise a few eyebrows if in fact it gets there. NDX looks almost exactly the same. The NDX, and that's a potential ABCD structure down on the NASDAQ. Same thing here on the NDX. I'll draw this one in just in case you haven't seen it or would like to see it, I guess. And that takes you down to the lows. So it's the same deal here, same deal on the NASDAQ. They're both set up exactly the same way, and they got basically the same volume characteristics. Although the NDX actually looks a little worse. Let's go to our friend the Russell. The Russell has been our tail almost, it seems like about 5 or 6 months now. It's been the best indicator yet of what's happening in the market. And if you remember last night, I was talking about this particular index as the one to watch because you were doing the test. And the test I was talking about was the retest regen off that swing point low. So when you break, for those of you who are not familiar with my methodology, right, the model that I've built, there's a concept called retest and regen, and it turned out to be a lot more important than I even thought when I wrote the second book. When I did the third book, it became very clear how critical this particular item of the model is. And that is when you break a swing point, and in this case a swing point low, and if you do come back within 6 bars, you're usually going to try to get to the top side right, of that swing point low, that becomes the test. If you can get back over it, now you're into a range, right? And eventually that could turn bullish again, right? Or it could go down again, but it's a range at that point, right? It's a different trade. But if you can't get over it, you retest it, and you instead regenerate in the direction of the break, which in this case is down, right? That's a retest, regenerate, success. You failed to get higher. That means this thing wants to crawl lower. In this case, you got an ABCD structure. The retest failure, we saw it this morning. That retest failure tells us we're going to try to get lower. All of them are going to try to get to the Fed 3 bar, the lows. NASDAQ, NDX. Here's the Russell. All doing the same thing. We'll see if they start crawling away tomorrow. It looks like it's going to be a tough day. And it's not just because of the indexes. It's because of the sectors as well. And if I pop to the sectors, there's none of these other than the safety sectors that are even trying to hold up. So I'll start with the two strongest one, which is your safety sectors, which is the consumer durables. Here you have a test failure at the highs that throws you into the range, and so this thing's going to trade inside some sort of a range. It looks like from about here to there. All right, that's your range now. I wouldn't be surprised to see it get down to the bottom of the range. The other strong one has been the utilities, and these look like the run's probably basically over, and it's into a range trade as well. The range here set up basically the same. You've got the swing point high here that's been tested. That's one half of the range. The other half is down below it, right, about equidistance, which is about what these usually do. So that's the range. I would think it's going to come and try to get from the top floor to the bottom floor, and we'll see if it does. And that itself will be a test. It will be a different type of test, but it will be a test. Those are your strongest. Now go anywhere else, and you're either going to see ABCD bearish ABCD structures in place, or just about to be put into place. Here's the IYT, fixing to put up the ABCD structure, going to break a swing point low, going to go down to the next one. And you can go through each and every one of these. They all look the same. The majority are set up to actualize potentially tomorrow. There's a few of them that already have, like the financials I spoke of earlier, that already have volume expands. You go under the B point. These want to trade lower. Go up here, draw in your ABCD structure, project it out. You're coming back down to these lows. Not only that, you've broken multiple swing point lows on the way down. You broke one already, now you break the other one. This looks like, this congestion area down here at the bottom is where this one wants to head to. That is the projection. So we're not, one thing to notice with everything I'm telling you here, and everything I'm suggesting to both you and to myself, is that this is not the cave-in, the 2008 kind of thing. And I know everybody likes to think that every time the market takes a spill. It could turn into that. But even if it is, it's going to take a long time, right? Those things just don't happen overnight. If this is that, it's just the beginning stages. Folks, a week ago we were at highs in the S&P. All-time highs. You don't come off all-time highs and go down 40%. That's not what happens. Yeah, you can take a 10% drop, but you're not going to drop 40% straight off the highs. There will be bounces. There always are. Especially off the highs, right? You get those V-shaped moves off the bottom, but that's a different story and a different reason. The reason they stay at the highs is because there's distribution. You've got big players out here that either haven't gotten rid of everything yet or have been getting rid of some of it already, and they got to get rid of the rest of it, and they're not going to let it just fall out from underneath you. Now, that's assuming it's a high and that's really what they're up to. I'm not smart enough to know that yet. We'll know that when we actually start testing something on a different time frame. So if I go over here and look at the weekly, for example, even on this index or this sector, you got to come all the way back here just to go to sideways. And that's true of every sector and every index. And if I just do the percentages here, what is the low here? It's 20.50 and we're at 21.54. You got to drop another buck. Another buck's 5%. You got to drop 5% just to get a trend transition on the intermediate term time frame. Can we drop 5? Sure. But that's a single swing point down there. That's not going to, that's not going to force a cascade down. Matter of fact, it's probably going to be the buy when you get there, if in fact that's what happens. So, don't run out and start, thinking that it's 2008 all again at this juncture. It's going to take a lot of work for that to set up. Now, what is similar to 2008 is that in 2007, and when I say 2008, I'm talking about the 2007 build up to 2008 crash, right? Remember, that happened in September, 2008 September. The first jolt took place back in February of 2007. It went from 2007 February. That was a Bear Stearns debacle. Looked like the world was caving in, and they went right back up again, and they went up for another year and a half. But it started with the financials, and it started with the housing. They were the sectors that were up the most, couldn't justify their PEs or anything else, right? Those were the ones that had the most froth, and those were the ones that began selling off first. Right now, what do you have? You have biotechs, you have big cap techs, you have a lot of froth in those areas, just like back then, right? They're the ones taking the heat first. And if this truly is the top and the top is in, which, it's possible. It doesn't mean it is, but it's possible. That is a similarity. Now, what you would want to see for that really to develop is that those sectors never can come back again. You don't see new highs in the technology. You don't see new highs in the biotech. If that plays out over the next 4, 5, 6 months, then that's a good indication that a top is probably in, right? And the distribution phase is underway. That's the sort of stuff that you have to look for. And when I talk about structure, that's what I'm talking about, right? There's structure on the charts in terms of the model, but then there's these underlying things you got to kind of look at. You got to kind of rationalize how they're setting up. If the sector that leads you higher never can come back and something else doesn't take its place, it's a pretty good indication that it's not going that much higher, if at all. But that takes a while. It takes a while to play out. Sectors look like that. Let's go quickly to the TLT. Bonds, I've been telling you, are trying to make a turn, right? They've been making this roll back up. Here they are starting to break out again. If you go to the daily and you look at them, here's the breakout today. You're back over that big bar again. If you do that range trade that we've looked at before, right? The range was here. There's kind of a sideways range with two halves, right? Kind of two halves inside there, and I drew this too long. It really is down here. Equidistant almost, right? And now you kind of got this, and I still don't know. I got to go back and look at that. I don't believe that spike high is true. I have to go back and see if that's true, if they cleaned up the data, because I don't remember that spike high. I remember this one. So anyway, I'll do that probably this weekend, because I don't have time tomorrow probably. But that, assuming it's here, right, it's coming back at it now. If it gets over this guy and there's not much volume there compared, right, it's coming at it with volume. You got another ABCD structure in place here, right, that's going to try to take it back up towards this, whatever this high really is, but back up into that area. that also, as I've been saying, the bonds look like they want to go higher, and if I can't figure out any other way for them to go higher than fear coming into the equities. And that's what you're seeing here today. I believe that's what's going to probably continue. If you see the bonds continuing to do this, that's probably a pretty good indication of what's happening with respect to equities and bond relationship. Now, the other thing is happening, which is interesting, is usually when there's fear, the dollar, finds a bid. And what's kind of fascinating is the dollar can't find a bid even with tapering and fear. Now, it did test the lows today, and it couldn't get underneath them and stay under them. I mean, it got under them, but couldn't stay under them, right? So that maybe is the turn for the dollar again. If that's true, and then I go over to the gold market, and I look at gold, gold struggled at the top of what is its retest regenerate zone. So going back to that same concept we talked about before, gold's testing the top of that, which is kind of unusual when you go more than 6 bars. This went more than 6 bars across. Usually it doesn't get that deep, but it came all the way to the top, right? Doesn't look like it's going to hold it. If the dollar starts to turn, if this thing can't break out with the dollar doing what it's doing right now, if the dollar starts to turn, you're going to see this gold come back finally. And if so, right, that's going to set up, some sort of a test back into this area. Now, longer term, I do believe, as I said last night, gold is probably going to hold here. But if I go look at like its cohorts silver, this looks horrible. It can't lift at all. This also is telling me that gold probably is going to come back. Let's go look real quick. And actually, let me take a couple questions before I do that. And then I'll take my chances at time and try to go over to European markets and so forth. So we got iRobot. We talked about iRobot last night. Let's see what it did. Yeah, that's not good, man. That's too bad. It was set up pretty well. We talked about the 2 lows, and it did the little dojis here, and it was looking pretty good, right? Holding that low. Still doesn't have the volume, but price rules, man, when it starts to get under them. It gets under the support zones. If you're in this name, now you're going to have to, you're either going to have to come out of it and try to come back into it down here, or you're going to have to take heat all the way to the low, potentially. 32.93, it's at 36.61. That's a lot of room. I don't think I would hang around that long unless I'm hedging somehow. Let's see, on the weekly it was 36.94, 36.61. This is a good example of what can go wrong that probably really isn't an issue with the stock. There's a couple things here that I think I mentioned it last night. This is a high flyer, right? Hasn't been hurt that much compared to most. Acting pretty well on the charts. If the general market and the sector weren't pulling it, which is what's happening, it probably would be still hanging up there, maybe trying to go higher. But when you consider the way the market works, right, you've got the general market, you've got the sector, and you got all the stocks down here, right? These are dependent on these, and these are dependent on that. If the general market starts heading down and the sectors are heading down, it's very hard to get this one to go up, right? 80, I forget what the number was that I did my research, but it was something like 80. I don't know. I'm not going to state a number because I can't remember exactly. But it was a large percentage. It's the lifting tide lifts all boats. The sinking tide sinks them all. And that's what you see happening here, right? This guy can't hold because the general market and the sector are pulling it down right now. Now, it doesn't mean it's a disaster. It just means on that time frame, it's not gonna be able to hold probably. And tomorrow will be a good test. If it can't get back above this swing point low tomorrow, and if the markets do what I think they're going to do tomorrow, you're not going to see that happen, which means it's going to try to drive lower, and that would be back to this area and that area. So, this is just one of those that the trade doesn't look like it's going to work, and you just gotta, You got to take your losses if you took a position, or you got to stay out of it if you're not in it yet. So, or you got to take heat. I mean, you can do any of those three, but it does look like it's going to trade lower. Could I look at Disney for the long term? Long term? Are you kidding? Who is this? Tommy asking me. That is too funny, man. You're looking at 73 for a buy. Okay. Let's go to the monthly. It's just funny because I can't see more than a couple weeks. Anybody ask me long term, I get a little bit more dangerous in my predictions. So I don't even think I'd think about it at 73. If you're gonna think about Disney on the long term, then put a long term chart up, right, and think about it from that perspective. So if I just look at this, the first support zone is 69.85 down to 68.80. That's what the TA Today charts are telling you. But what you really need to look at is if that one doesn't hold, where's the next one? 38. Now it ain't going to come all the way back there. You got a swing point high up here, and you'll probably get a retest regen. But to get the first retest regen is at what, 46? Now I'm not saying it's going to come back here, but if I'm thinking long term, I'm not thinking buying up here. I'm going to let this market play out a little while and see just how bad it wants to get, because if I'm thinking long term, it doesn't matter if I buy it at 70, right, or if I buy it at at 72. I mean, that's irrelevant, right? If I'm buying 70 versus 72, who cares? Because I'm going to be in it for years, or at least months. I care if I can buy it at 45 versus 70, though, right? So, this sort of situation, you got to wait. You just got to let this play out a little while, and then take a look at it. First bar that has any volume is here. That is this bar. And you see those tops across there, so I would think at least, let me clean this up and get a number there. I would think, I don't even think I'd think about it long term until it at least came back into the 63 to 68 range. That would be the first time I even look at it for a long term buy. Let me see here. Dan thanks me on XLU. Sure, no problem. I note we had 15, 20, and 10% corrections in 2011 and 12 on the way from the bottom to last week's top. Okay, I'm not sure what the question is, but yes, we will have a correction. I've been talking about that. We will have one at some point, right? You just have to wait for the structure to line up, and it's lined up now. So. Had somebody else ask me about, they texted me about IBB or about the biotechs. Question was, as I mentioned that the biotechs were ready to bounce. I forget exactly here. Let me read the text and see exactly what he said, because I'm paraphrasing and I don't want to paraphrase. Earlier in the week, you mentioned the biotech sector, XBI, may have put in a short-term bottom. After today's action, do you still feel the same way? Thanks. I think what I said, and if I didn't, I'm sorry. I didn't mean it that way. And I was speaking to the fact, and I believe I was talking about it on these two bars. And I believe what I said was it was a short-term bottom, and what I meant was on this time frame, you were testing the lows on lighter volume, you couldn't break them. That suggests you're going to get a bounce, and that's exactly what you got. And you knew it would be a vicious bounce when it happened, and that was what I was talking about. Now, when that bounce occurs, you look at the volume. Volume's 2.7 going back up. What are you coming back into? Well, you got into it, and that bar you got into is 6.5. You could get even higher, but if you look at this, right, you know that even if it gets higher, it's probably going to come back again, because the volume just isn't right. I mean, they're blowing the volume out here, yet on the upside, nobody wants to buy it. And so that's just a short covering rally, people taking profit or people getting scared out of a short position. Today they flip around, they take it right back down. So that was what I was trying to say. How do I feel about it now? No, I think this thing's going lower. Volume wasn't huge today, but look at your weekly. You're at a swing point low. I mean, there is no contest here. This thing's going to the next level is about 213. It's going to come into this big bar. That's the next spot, 211.5. 211.5, you can look at it and see what it does there. But right now, you got a lot of trapped people, and they're just getting hammered. Let me quickly go over to the markets, the European and so forth, because I want to quickly look at those. I'm way over time already. Okay, I'm gonna sneak in too here because I got to look and see what happened in Europe, and I'll do it with you. I meant to do it myself tonight. So, okay, so nothing there on the CACs, a little bit of spill, no real volume, couldn't go anywhere. We talked last night about these should be struggling today, and they look like they did. Same thing on the FTSE. They all flipped around. Looks like they were up a bit and then flipped around. They actually started lower, went up, and came back down. So, or at least the FTSE did. Yeah, these are coming lower. They're going to come lower. So, I think it's going to be a tough night for most markets around the world. I don't know that they're going to spill quite as bad as we did. That may lead to a little bounce in the morning. But man, this is set up bad. This is not a good scene. I said it last night, I'll say it again. It's not the same structure that we've seen, and on a short-term basis. And this is going to come deeper. And, whether it's tomorrow or it takes it until Monday or Tuesday, it's going to happen. Let's say it a different way. The probabilities highly favor a continuation move, 2 to 3 bars off these breaks. So don't step in the way of it until it stabilizes. Folks, have a great night. Thanks for joining me. Take care. Tell a friend, tell two. I'm LA. This is and was your daily TA wrap. Have a great night. See you next time. Good night, folks.